Hello, traders, and welcome to the Friday Wrap-Up. This is brought to you through FXCL Excellence in Trading. Traders, this is on the Friday of August 1st, 2014, but I have to tell you, I'm actually doing it Thailand time, Saturday night. And the reason is I had little problems with my charts, my MT4 charts. So we got it resolved, got the charts set back up, so we're ready to go. All right, traders, great to be with you. It is absolutely a beautiful day today in Thailand, and just having a good time. And it's always great to be with you. So let me introduce myself to you real quick. My name is William Gilday, and I'm your moderator for the Friday Wrap-Up and also the Market Open Preview, which we give to you every single day before the London Open. Traders, I started trading in 2006, and when I retired from the fire rescue department out of the great state of Florida, I came to Thailand for a 3-month vacation to celebrate my great career. And traders, it's 2014, and I'm still here. Just want to make a quick note that I absolutely love trading the Forex markets. I like being in the market. I just like doing it. I don't know how else to put it. I like being in front of my charts. I like doing fundamentals. I like trying to figure out what the heck is going on out there in the world, and it's just a lot of fun. And I really enjoy being with you every single trading day. All right, let's get over to the risk disclaimer, the legal stuff. Forex trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, please remember that past performance of any trading system or methodology is not necessarily indicative of future results, i.e. meaning if you're on a demo account and you say you're winning 75% of your trades, remember when you go to a real account, that's probably going to go down to 60% or 50%, right? Because what happens? Psychology gets in the way, right? So just keep that in mind as you move from demo into a live account. And of course, we want you to get to a live account. You all want to make profits, right? All right. Okay, so what do we say? Let's start off with our weekly commentary. So we absolutely had a red day at the close of the New York session. The Dow closed down 0.42%. The S&P closed down 0.29%. NASDAQ closed down at 0.33%. And going on the other side of the pond, yes, all red also. The DAX is down 2.10%. FTSE's down 0.76%. The CAC 40 is down 1.02%. Euro Stoxx 50 is down 1.39%. Wow, traders, that's unbelievable. The S&P ASX 200 out of Sydney, Australia, is down 1.36%, and the KOSPI is down at 0.42%. And this is the weekend, so none of the markets are currently trading. All right, let's just scan over here for 1 second, and let's just take a look. Look, gold is up at 0.94%. Wow, yeah, always like to look at gold and oil. Brent oil is up down 1.28%, and crude oil is down 0.56%. So always good to look at that. What's natural gas doing? Natural gas down 1.16%. So, stuff's going on, things are happening, and that's all good. And that's what we like to see. All right, let's just make a little bit of commentary over last week's trading. Last week, we had some nice trades. We had some quiet days, though, didn't we? It was really a week of sitting on your hands, a lot of long hours of basically nothing going on, slow markets and stuff like that. But there were some nice trades out there, and it was quite interesting. Unfortunately, I missed 2 really, really great trades this week, which is unfortunate, but they ended up working out very well, like 60 pip trades on each of them. But on the whole, the market was very quiet. Now, Thursday, we had some moves, and then it died off because you know what happens on Friday, we had non-farm payroll. Now, on Thursday, it was Wednesday, ADP came out, and they gave a low number for employment numbers. And for those of you who don't know what ADP is, it's a payroll company in the United States, and it's the largest payroll company in the United States, and it's in every single state. And basically, you can have a company as small as 1 or 2 people, or a company that has 50,000 people and they do basically all your payroll for you, taxes, benefits, deductions, whatever. This company does that. So they're a pretty good gauge of what's going on in the employment sector in the United States. So that number came out low, and I think everybody was really expecting a good NFP number. And wow, did we get hit in the head or what? It was not a good NFP number. The one thing I wanted to say was the market didn't move very much. This is the second time we've had drastic numbers. Last month we had, what was it, 288 or something like that, and they were expecting 250. And, it was a really good number. The market would have moved like 40 pips on the pairs that I was looking at. And we had a really bad number this week and for this month. And the markets didn't move either. So pretty crazy on that note. All right, traders, what we're going to do tonight, I think I got like 11 or 12 charts that we're going to take a look at. So, sorry about that beep on there. I hit the wrong button. Yeah, we're going to look at some daily charts. And we always do this on the Friday wrap-up. Just take a look at what's going on in the daily charts and what we can expect as we move into next week's trading. So let's get started. We'll start with the euro dollar. Now, take a look at this. The euro dollar came up, and you can see last week it actually came to the 200 exponential moving average, which of course is that green line. And traders, look at what happened. It came back down again. So what does this mean? This could be fibbing the last swing, or as the gurus are saying, this could be a market that the euro is going to drop off because there's nothing good coming out of the Eurozone, right? I mean, we know that. There's no good numbers coming out. There's nothing really exciting coming out of the Eurozone. So, it is what it is, but the Euro's got some issues. So I would expect, if I had to make a judgment, that the Euro is going to continue to fall, and my bias is still to the bearish side. All right, let's take a look at the dollar Swiss. Dollar Swiss, again, just bearish. Bearish looked like, a little over 2 weeks there, to the upside. Looks to me like it's just a fib of the last swing, right? You can't knock Fibonacci numbers. I didn't put fibs on here. Maybe I'll do that next week for the Friday wrap-up. I'll put fibs on the daily charts for us. But, now this looks like this is heading back down to its normal position. And Friday's candle, you always got to remember Friday's candle. You got position squaring, you got people taking profits, and we had NFP. So all that states why we're probably seeing a little break in the trend, sort of, as we can say. However, take a look at this. Now, did we expect this 2 months ago? I didn't, but it's happened. We have a change of trend on the pound dollar. Look at this trade. This is just bearish, bearish, bearish. I think it's coming down to 1.67. I think it's coming back down to that 200 exponential moving average. We do have some decent support at 67.40, 45 there. If you look left of the chart, you can see that we have support, and we'll probably get a bounce there, but this is just so bearish. This just continues to be bearish. Let's take a look at the dollar yen. Here's a dollar yen chart. We talked about this a while back, that this was bouncing off. In fact, we talked about it the day that the dollar yen broke that 200 exponential moving average. And look at this. This just continued to go. It's taking out, if you look left of the chart, previous highs. So it made took out the highs. Now it looks like it's just taking the pullback move here. And again, I expect this to continue to the upside, and most likely because of the situation with the dollar. The dollar is very strong at the moment, and we have to recognize that. All right, here's the Aussie dollar. The Aussie dollar has been a very hard pair to trade, traders, and if you're trading it and you've done well, my hat's off to you. I haven't traded the Aussie dollar. I think it's over 2 weeks, and the reason is it's just too difficult to trade. There's not, things that I'm liking here. If you take a look at this daily chart, spatial intelligence, this is pretty sloppy. Like, there's no sense of direction here. Up, down, all around. There's no trend here. There's no trend at all. There hasn't been a trend in a long time. This has just been sideways, and it's been nasty. So if you are trading the Aussie dollar, please be careful with your trades and make sure you get to break even as soon as you can. Here's another interesting pair, which we were bullish on for months, and now we're bearish. Take a look at this. This is the New Zealand dollar, and we talked about this during the week, last week, that it broke that 200 exponential moving average. Now, look at Friday. I would suspect that that candle breaking the 200 exponential moving average was due to NFP. So as long as this stays closed below this 200 exponential moving average on the daily chart, I'm going to stay with this bearish bias. However, if you look left at the chart, you can see where it's support again, right? Always look left of the chart, and you can see that where it's support here, probably about 84.55. So, just got to keep an eye on that. But we are at coming down to support. But I am bearish. I continue to look for some bearish moves. Here, take a look at this CAD. Here's the CAD, dollar CAD, and this thing's just been on a rampage to the upside. And why is that? Because it's correlated with the pound. And usually the CAD does exactly the opposite of what the pound does, and that's what you're seeing. The pound is extremely bearish, and the CAD is woken up to play the game, and it's been very bullish. And if you was going to trade this, my bias going into next week is absolutely to the upside. So we're looking to take this to the upside. I think it's a great trade. Nice above the 200 exponential moving average. Traders, whether you like the 200 or you don't like the 200, at least you have to respect it, because we get to these higher time frames, and over again, we're seeing that they just get respected over and over again, and they just don't pop through and go through them easily, like on a 15-minute chart or a 5-minute chart, right? You get above an hour, you get the 4-hour chart, or you get into a daily chart. These 200 exponential moving averages are absolutely respected. So we need to respect them, right? Okay. Here's, one of my favorites, and this looks like it's finally starting to take some formation, back up into the bullish trend here. Last week was, a down week. It was bearish. But this looks like this is, now it's pretty range bound, but I'm gonna say that going into next week, I'm not gonna trade this Monday or Tuesday. We're gonna have to get some sort of direction here, and we're gonna have to see what the heck is going on here. We're at some key levels here, and until we get some sort of direction, I'm not even gonna touch this one. This is just not touchable. Traders, something we're going to talk about on a regular basis from now on, we are going to talk about the dollar index. The dollar index. And traders, if you trade the euro dollar, you should have the dollar index and the euro index side by side, and and have a screenshot, where you have those two charts live that you can flip to really quickly, and you can see this dollar index is strong, right? And if you looked at the euro index, you would see that it's very weak. So of course you would buy the dollar on that, and that means you would be selling the euro dollar. So yeah, the dollar index, look at this, above the 200 exponential moving average. And traders, I talk about this all the time. It's not just me and you that are seeing it. We'd like to say we're unique, but we're not. There's a lot of people watching this. So a lot of people watch the dollar index in all the markets, Forex, futures, commodities, stocks. People watch the dollar index. It's amazing how much it's recognized. And that wraps it up for our charts review this week. And I'd like to thank you, traders, for joining me for another Friday wrap-up. It's been great. And I'll get you on Monday for the market opening preview. And I'll get that into the YouTube channel before the Monday. Traders, have a great rest of your weekend. Enjoy yourself. Take it easy. Relax. Get refreshed and recharged, because we're going to have a great week next week trading the Forex. Take care, traders. Have a good one. Live from Pattaya, Thailand. Take care and